Welcome to Green Time. I'm host Don Fitz. This episode we're going to be talking about Stop the Takeover of Nature by Financial Markets, and we're going to see a movie by that title. First of all, I want to introduce a couple of guests who are going to explain a little bit about what that movie is going to cover. I have with me Fred Raines, who is Professor Emeritus of Economics at Washington University.
Glad to be here, Don.
Glad you could join us. Okay, and I have Henry Robertson, who is with the Great Rivers Environmental Law Center. I'm glad you could join us, Henry. Now, Henry, what are some of the things that we're going to see in this movie that has a lot of ideas packed into a few minutes?
Well, we're going to see how the financial markets are creating property rights in nature. Certificates that can be traded like stocks or bonds. And the idea is supposed to be that this will protect things like clean air, clean water, and a climate we can live with. But actually, the effects are very different.
And so it's not good for the environment.
No.
Fred?
And it needs to be kept in mind that what's been happening is that over the recent decades, we've had a movement, global movement, towards free markets and towards economies that are run by private sector actors rather than by governments.
Okay, great. Well, let's take a look now at Stop the Takeover of Nature by Financial Markets.
Stop the Takeover of Nature by Financial Markets. While people are concerned with the harsh austerity measures implemented in many European countries as a consequence of the financial crisis, financial actors are working almost unnoticed towards the submission of nature under their logic. We live in a so-called financialized economy, an economy dominated by finance and financial actors which focus on creating new investment and profit opportunities. The key to do it was the creation of a single global capital market through the abolition of control of movements of capitals by governments, the deregulation of large sectors of the economy, as well as the withdrawal of the state in providing essential services to citizens. Trading money, risk, and associated products has become more profitable and outpaces trading goods and services for capital accumulation. This has huge implications over the daily exposure of people to financial markets in aspects which go from home ownership to pensions and schooling. In this financialization process, financial markets and its institutions take control over the productive economy where goods and services are produced, and corporations, households, and banks are transformed to abide by the logic of financial markets by speculating or getting indebted. Instead of financial markets providing money to produce what people need, money is increasingly invested into financial markets to operate and expand. It literally turns the world upside down. Now, the housing bubble has burst, and the huge sums of money in financial markets are now seeking new investment opportunities. And this is where nature comes into the picture. About making profits with nature, we know already the role of financial players investing in mines, oil fields, or agricultural activities, or purchasing cargoes of raw materials by playing on price trends or derivative markets. But the financialization of nature currently at work is a much deeper process. Back in 2005, the EU introduced the so-called Emission Trading Scheme, ETS, with the argument to reduce carbon emissions. In this scheme, companies are given a maximum of rights in the form of emission certificates to pollute the air with CO2. As the certificates can be traded between companies, financial markets were created and CO2 made a financial asset. This has created a profit opportunity for many companies and financial actors buying and selling emission certificates. EU economies continue to produce in an unsustainable and polluting way above the limits that the planet can support, rather than reducing their own emissions. The same proposals are being made for forests, biodiversity, or ecosystems, and all the ecological functions that could provide a service to humanity. To submit nature under the logic of financial markets requires to define what nature does as environmental service, So the tree's capacity to capture carbon, the decomposition of waste, water purification, and regulation of the climate is now defined, normalized, quantified, and certified as an environmental service. Once this is done, you can start placing a price tag to each service, evaluate their current status, state a limit, and concretize in economic terms the cost of their conservation in order to develop a market for each particular environmental service. So nature as such becomes a company, and for this, the green economy and market-based instruments are powerful tools for managing the economic invisibility of nature. With new property rights, a new phase of enclosures and extraction of natural resources and biodiversity, grabbing is taking place, so people are kicked off their lands, communities and nature are destroyed, and the global south becomes the loser. All those engaged in this green economy and financial markets become the winners. This green economy is no solution to any of the problems and crises we are facing today, whether it is to deal with climate change, to maintain biodiversity and ecosystems, or to offer a solution to unemployment and unequal distribution of goods and wealth. There are many alternatives to solve these problems which are outside of the logic of financial markets. We must not privatize nature, submitting it to the profit interests of financial markets. We must defend and reclaim old and create new commons by excluding markets and financial markets from their management and control. This also includes the various public goods and services. We must change the way we produce and consume, orienting our economies towards real needs we have and towards more localized economies. We must promote a model of production and distribution of food based on food sovereignty, as well as decentralized and democratically controlled production of clean energies. We must shrink the financial sector, regulate it, and get it under democratic and public control to make sure it is functional to real needs and the public good. Get engaged in fighting against financial markets taking over the control of nature and in the promotion of real alternatives.
Welcome back to Green Time. I'm host Don Fitz. We just saw the movie Stop the Takeover of Nature by Financial Markets. In case you've forgotten, I have a couple of guests with me to talk about this issue during this episode. I have Henry Robertson, who is with Great Rivers Environmental Law Center, and I have Fred Raines, who is Professor Emeritus of Economics at Washington University. Okay, Fred, I wanted to ask you, what does it mean about the change in markets? Because usually we think of markets as people sell goods and services, you buy and sell things. And what sort of problems, economic and environmental problems, can happen when you have these financial markets which control such enormous resources by moving pieces of paper around?
Well, Don, it's true. We used to think of markets as producing things, whether cars, refrigerators, or services that people use. But what's happened in recent decades is we've moved towards financial markets. And that's been made possible because countries have abolished their right to control capital flows. And there are really two things that a country has to have if it's to control its own finances. And the first thing, it has to control its own currency, Greece and the euro being an example of how not to control or not having control of your own currency.
Right.
And the second thing, it has to be able to control international flows of capital. And what's happened is the push towards the free market in recent decades. Financiers have taken over. So what we have is people have no commitment to an individual country or an individual forest or anything to do with the commons. They're the ones wheeling and dealing.
What do you mean by the commons? What does that word mean?
Well, we usually think of the commons as some kind of community land where people can commonly grow things together. But it's the environment. It would be the airwaves that we sell off, for instance, here and globally. It's the whole idea of things that people share as a community as opposed to individual properties.
Okay.
And what's happened is that financiers have been taking over more and more this common community, the idea that we should have something that we work together and that we prosper because we all benefit from the commons.
Okay, Henry, I want to ask you, how do you think that this has happened? Fred's talked about how this has occurred over the last few decades, that it used to not be so severe, that the commons is becoming increasingly restricted. But what's happened in the last few decades which has allowed this to occur?
Well, if you're talking about the financialization of nature, you have things like the European carbon trading scheme. Okay, or you have, for example, Bolivia a few years ago tried to privatize its entire water system, and the people rose up against it, and the foreign corporations coming in and managing their water. But if the idea is to preserve the values of nature, the things that nature does for us, like give us clean air and water, if those values are now represented by these certificates that can be traded, the price can go up in a bubble, and the price can crash. And that's not a way we preserve values.
We certainly saw that happen in the housing market. When was that? Starting about 2008, when the housing bubble burst?
Yeah, around the 2007, 2008.
And so what could happen if these bubbles burst, if they privatize nature and speculate that nature is worth so much and all of a sudden it's not worth that much?
Well, in the case of the housing bubble, what happened is that there was speculation because of the invention of these financial instruments such as derivatives. They could bundle together a few called subprime mortgages and multiply that and speculate that and sell those on margin. And so what you have is a few tens of billions of dollars of people being underwater multiplied into trillions of dollars of financial loss globally. And that was, again, because the financial sector could run free rein without it, and incidentally, without any controls. It's been very difficult to control this. And we have a law of Dodd-Frank that imposes some minor controls, but basically, while we control money supply, we do not control these financial instruments, and they're global.
And what could this mean for nature? If you start to financially control, if the finance markets take control of nature and we buy and sell, Henry, what sort of problems can that?
Well, we saw an example is what happened to the European carbon markets. That depended on having a real price on carbon dioxide, but they didn't get it right. They gave away too many of those certificates, and the price of carbon dioxide collapsed, and so the system didn't work.
Okay.
And it's the same if you're trying to preserve a forest, say, in Africa, which is one of the ways, one of the things you're allowed to do under this European trading scheme. If the value of that thing on paper collapses, then it's not going to be protected.
Okay, so they're basing in other words, instead of basing things on the regulation of the forest and say you can't log here, you can't do that, they just base it on what they think is the value of the forest, and that value can collapse much more easily than, say, a law saying you can't logging.
Yeah, because it's really not related to the forest at all. It's related to those certificates being traded among speculators.
So that could mean that the forest could be, anything could happen to the forest if the value falls.
Right.
Well, one wonders what these developing economies that allow this, why do they do this? And really, in my mind, the reason they do it is that they have present financial and economic needs. This looks like a short-run gain to give these property rights away, but they're really just sacrificing, they're giving away their future.
Right, and that can be true in terms of giving away rights to oil, which could have a catastrophe and destroy the water and the land. It could happen in the case of a forest, that the forest would be destroyed and never recuperate. So any sort of thing could happen if the financial market collapses.
Right. It just we're at risk, and they're not really. There's really no commitment of these financiers to any particular country. They may be based in the U.S. because we have the biggest military, but they don't really think of themselves as committed to any single country. or to really any specific long-run sustainability goal.
Let's get back to that. But right now we're going to take a break, and we will return to our discussion in just a minute. Welcome back to Green Time. I'm host Don Fitz. With me, I have a couple of guests who know about the Stop the Takeover of Nature by Financial Markets. I have Fred Raines from Washington University, and I have Henry Robertson from Great Rivers Environmental Law Center. Now, we were just, before the break, we were just talking about some of the issues with financial schemes. What are some of they go by emissions trading system, which is what they use, the term they use in Europe, ETS, emissions trading system. We also know that as cap and trade. You put a limit on how much pollution or carbon dioxide you can emit, and then you buy or sell the right to emit more carbon dioxide. And then there's a whole nother system which is RED, reducing emissions from deforestation and forest degradation. So how can these things go wrong?
Well, you take suppose under these carbon emissions trading scheme, you've got a company in Europe or America, and it's going to get some carbon credits by paying some money to protect a forest in Africa. Because this forest locks up carbon as long as the trees aren't cut down.
Okay.
But how does that manage that forest? Who's there on the ground in Africa? Who's hiring the people to watch the forest to make sure that it isn't illegally logged?
Well, there's actually fewer people watching the forest, because to turn it into a commodity, you have to drive the indigenous people off the land.
If there are people living there, they have to go.
They have to leave. And so if there were people living there, they would not want loggers to come in because that's where they live.
Right.
But now they have to go, so there's nobody to watch the forest. Now you have fewer people to watch it than you did before.
And the company in Europe doesn't care, and the people who buy their carbon credits and trade them on the financial markets certainly don't care. They probably don't even know where this forest is or if it exists. So it's not...
Well, the original idea, I think, was that with these emission credits or carbon credits, was that you would sell these and raise money for sustainability for the government, and then you'd gradually lower the amount of credits that were available until you addressed things like climate change, and the whole process is susceptible to human nature and the corruptibility of human nature. And this is particularly true in people who don't have a vested interest in any particular forest and don't have a vested interest really in any particular country. They're just out for the money, and they don't care about the externalities.
Right. Now, isn't there another big problem with this forest system, that it's based on, okay, if they cut the forest down, then the carbon would not be sequestered or held in by the trees. And so we'll get to pollute more by paying them not to cut the forest down, but you never really knew for sure that the forest would be cut down, did you? And so that would, you might just be giving the country in Europe or the United States the right to emit more carbon dioxide from their factories, while you're not really doing anything in the other part of the world.
Yeah, you're creating sort of a fake market, and that's a lot of capitalism today, just creating a market for things that naturally would occur and should be encouraged, but aren't necessarily encouraged when they're turned over to the financial sector.
Yeah, and another problem that I've read about with the RED, the deforestation scheme, is that if you have a demand for lumber, and you can't get it from this forest in Africa, because, say, this country did guard it very carefully. Well, if their demand is there for lumber, aren't they just going to cut the lumber from somebody else's forest someplace else? Who does the worst job of protecting the lumber, they'll just get the lumber illegally there?
Well,
Isn't that the way markets work? If you need it, you get it?
They'll find some country that is really in dire circumstances, and it'll look good in the short run. But as we pointed out, not so good in the long run.
Okay. Well, Henry, let me ask you this. We've talked a lot about the problems. How could you manage a commons sustainably? Why don't you review to the viewer what a commons is and how this could be managed sustainably?
Yeah, a commons is an area or a resource that a number of people share rather than being individually owned.
Could be a whole country shared, or it could be 10 people.
Or it could be very small.
It could be clean air, clean water.
Well, that's a commons that you can't very difficult to manage. But
Yeah.
no, there's a Eleanor Ostrom, the late Eleanor Ostrom, won a Nobel Prize for studying exactly this kind of thing, and she gave examples of commons that have been managed by local people for centuries. You might take, say, a little bay in Maine where there are lobsters, and all the lobster fishermen have to share those lobsters. They are managing a commons. And they do it. They police themselves. They make sure nobody takes too many.
And so if half the lobster fishermen, is that what if somebody gets lobsters as a fisherman?
Or a lobsterman, I think we call them.
So if half the guys who collect lobsters get too many, what does that do for the rest of them?
Well, they're going to be pretty angry at the guy who took too many and make sure he doesn't do it again. And that way.
And so does it actually work?
Yes, it does.
And so is it?
We do have international fishing rules, but they seem to be weakened, and they're not followed. For instance, whale, the hunting and salvaging of whale oil and whale products when this is a species in dire danger of extinction. So part of it is, I think, that people have to take a greater commitment for the commons. They have to understand the externalities of this free market system, and they have to be committed to defending the commons. And I think that's one thing that
and of course,
the video we watched points out very clearly.
And of course, it's not just an individual commitment to protecting the commons, it's actually trying to get that enacted into law, that you actually have the legal right to protect it, and that people don't have the right to sell it.
Yeah, we've been going the wrong way for
Right.
about 3-4 decades.
Okay, and the other question that we wanted to talk about, what do we do positively, Fred, is how do we reverse the trend towards a globalized financial, this global financial market that destroys the commons? How do we, what things would need to be done to go back into the right direction?
The quick answer is that we need to shrink the financial sector, because it's been the fastest growing sector of all developed economies, and it's really taking over undeveloped economies. Now, how do you do this? Well, one idea has been kicked around quite a while, originally introduced by a Nobel laureate economist, James Tobin, is to tax financial transactions, and in particular tax those transactions if they're speculative in nature, if it's not having anything to do with an investment that builds a real resource, but it's just,
By financial transaction, you mean buying and selling?
Buying and selling. Right now we have, for instance, perhaps the greatest example of all is foreign exchange markets. There's a winner, there's a loser, and the amount of transactions per day is in the trillions. Tax that at a small fraction of 1%, and you'd raise billions of dollars, tens of billions of dollars over a period of a year. If you had a 1/4% tax on every dollar of foreign exchange.
Well, let me see if I understand this right, because you're the economist.
Okay.
Okay. I might buy and sell a few stocks and bonds during my life, and if I had to pay 1/4 cent on each stock and bond, that would be almost nothing to me. But on the other hand, if I do nothing but sit at my computer all day long and buy and sell all day long, then if I'm paying 1/4 cent on every dollar, that would be a huge amount, and so it would force me to slow down that speculation.
Right. To give you an idea, we talk about, there's a lot of talk in conservative radio about how we have a $16 trillion debt. And actually our GDP is about $15 trillion.
You got to wrap this up in about 10 seconds, because I'm getting the wrap-up sign.
The foreign exchange market is something like $800 trillion a year.
Okay.
Tax that at a small fraction of 1% and see what happens.
Fantastic. Okay, so we got some serious problems, we got some positive solutions. This is a complicated subject, but it's very, very important for defending the world environment. I want to thank everybody for tuning in to this episode of Green Time. I want to thank Henry. I want to thank Fred for being with us, and please tune in this time next week.